Hey, so in today's video, I'm going to be talking about a commonly known investing strategy that's perfect for 2020. Let's get right to the video. So what is this investing strategy, you might be asking yourself? Well, this is something that I've covered before on this channel, so if you want a complete in-depth guide to what it is, then go and check out the video that's going to be linked on the screen. Now, this is Dogs of the Dow investing, and if you haven't heard of it, it's a pretty simple concept. Now, the Dogs of the Dow investing style is one that is definitely suited for the long term, and how it works is you invest in the dividend payers that pay the highest dividend among the Dow companies. Now, it's no secret that when it comes to investing, you really want to outperform the market. You want to beat the S&P 500. So how does the Dogs of the Dow investing strategy rank compared to investing in the S&P 500? Well, if you look at the chart that I'm going to have displayed on the screen right now, you're going to see a comparison between the Dogs of the Dow and how the S&P 500 has returned. And you can see, based on this chart, if you started investing in Dogs of the Dow back in 2015, as well as the S&P 500, you would actually get a much better return using the Dogs of the Dow investing style compared to if you just invested in the S&P 500. And year over year, this proves to be true up until we hit 2019, where the S&P 500 actually had larger of a increase in return than the Dogs of the Dow strategy. Just so you guys have an idea of what kind of companies are in this list, I'm going to display that on the screen right here. You can see there are 10 different companies. You have Dow Chemicals, ExxonMobil, IBM, Verizon, Chevron, Pfizer, 3M, Walgreens, Cisco, and Coca-Cola. And what I actually did was implement this strategy in my investing this week in the Robinhood Challenge. Now, if you don't know what the Robinhood Challenge is, essentially what it is, I take $100 every single week and invest it incrementally in the stock market. I try to grow my portfolio as big as I possibly can through passive dividend investing. And what I do is take the dividends and reinvest them back into these very solid companies. And this has been going on for a little while now, so let me show you the progress. All right, so now that I am in the Robinhood app, let me show you what's been going on. So this past day, I was able to make $8.94 on the market. It's been a long green run for us here on this channel, so that is very solid to see those results. Over the past week, we're up 1.33% at $47.43. Over the past month, we are up $90.99, and in the past 3 months, we're up $184.55. Now, the duration of this challenge, we're now up over $250, so that's really, really solid to see those results. Let me show you some of those dividends that I do have rolling in right now. You can see if I sort it by dividends here, these are all the ones that I do have coming in. So it's starting to accumulate a little bit more. Every time I post one of these videos, I'm getting a little bit more back in dividends. And like I said, I'm just reinvesting these. So it's very, very solid. And this has been paying for a while now. So I'm actually able to make a decent chunk of change just from dividends alone. Now you might be asking, hey, how did you apply the Dogs of the Dow to your investing style this week? Well, I just decided to add a company that is straight from the Dogs of the Dow to my portfolio, and that is Cisco Systems. Not to be confused with the Cisco food company. This is Cisco Systems here, and you can see that I have an average cost of $49.12. So I lost just a little bit of money on the stock market from this alone today, but not to fret. This is a long-term investment. Like I said, the Dogs of the Dow strategy is something that pays off in the long term. You can see that they have a dividend yield on here. It's 2.86%, but that is completely false. Their actual dividend yield is 2.94%. Hey, do your research outside of the Robinhood app. I say it on a lot of my videos. Here's just another example of why it's not okay, why you should be doing research externally as well. Now, when you're looking at more of the stats for this company, you can see that their PE ratio is 19.53, which is pretty solid. That's a relatively low PE ratio, so that's something that catches my eye, something that I like about them. And their market cap, you know I love investing in these really, really big cap companies. So this one's $207.96 billion. That's just a very extremely large market cap, so pretty happy about that. Average trade volume is pretty solid too, so not that I'm really worried about that, but that's just something else to take into account. Now, Cisco Systems is from San Jose, California, centered in Silicon Valley, and what they do is manufacture and sell networking hardware and software and other telecommunications and technology, higher realm technology, to a bunch of different consumers. So how does Cisco's chart add up? Well, you can see that over the past year, they're going on a little bit of a dip. So this might be a very, very solid time for investors to get in on a company like this. You can see they are still relatively high in price because over the past 5 years, years, they're up nearly 76%. So that's very, very solid return. So it is, the market has been crazy. It's been going up for so long. It's hard to find a lot of great stocks at a cheap discount. It's very hard to find that right now. But this is one that I've been eyeing for a little bit of time now. And I thought, hey, this might be a decent time to jump in. So I did start my position in the stock, and we'll see where that goes. Now, when you make your own decisions, definitely do as much research as you possibly can. Don't just copy one guy on the internet because I'm investing in it. That doesn't mean that you need to invest in it as well. Definitely do your own research and really think about your investments. And these are ones that I like. I like sharing my process, but obviously don't just blindly copy. It's not going to work out well. So let me know if you guys have heard of the Dogs of the Dow investing style before, or is this your first time? Well, if it is your first time, then you might want to go check out that video I was referencing at the beginning, and I'm going to have that displayed on the screen right now. And if you guys did enjoy this video here today, make sure you smash that like button. It really does help out with that YouTube algorithm. I'm just trying to get the investing message around. So thank you so much for checking out this video, guys, and have a great day.